Car payments hit a new record for the second quarter. On today's show, we are discussing what's behind the numbers, as well as Edmunds' forecast of a slower SAR of 15 million for June. Here now is Joseph Yoon, Edmunds Consumer Insights Analyst. What say you, Joseph, about this? We're talking about high car payments and a SAR that is just 15 million. Two scary things there.
The high car payments are kind of a condition of the market right now. Cars are more expensive than they've ever been.
Yeah.
We're having very high interest rates, the highest they've ever been since 2008, 2009, when we had the big recession. So when you combine those two things and a car shopping public that may be struggling financially in other areas, really the only thing they have left for them is a huge monthly payment or a super long loan term, which is something else that we're already seeing. And you combine all of those factors and you get something of a very low SAR, which is also an alarming part of the market right now.
Sure. New car buyers, as I mentioned, have committed to monthly payments of $1,000 or more. What were the key factors that were driving this? You mentioned a few of them: interest rates and car and affordability, right?
Yeah, it's just really unfortunate because the average monthly payment right now is over $750. And when the average monthly payment is over $750, it's not that far of a reach to get to 1,000. We're not talking huge, extravagant vehicles. We're just looking at like a mid-tier 3-row SUV.
Yeah.
Maybe you didn't have that much to put down. Maybe you just, life happened at you and you have to get that bigger vehicle, and maybe your car had a little bit of negative equity that you had to carry in. Boom, you're at over $1,000 just for everyday families.
That's right. That's right.
The cost of living has gone up, and with the cost of cars going up so significantly and so quickly in the past 5 years after the pandemic, that's kind of where the crunch has really happened, because prices effectively jumped to like $10,000 overnight. And when that kind of jump happens without wages really rushing up to meet that, we're stuck in a situation where shoppers are feeling really, really pinched.
Sure. So as we mentioned earlier, more car buyers are choosing 84 a month or plus loans to get them through all of this. Talk to us about that.
Yeah, so when you have super high prices and super high interest rates, let's say you last bought a car 7, 8 years ago when interest rates were basically nothing, you're getting thousands of dollars off when you're just negotiating with the salesperson. Now you come into the dealership and they're like, sorry, maybe the best we can do is $500 off. That's the max incentive that we can allow. Even if you're a qualified buyer, you're getting close to 7%, maybe over 7% in interest rate. So you walk into the finance office with a number that you had in mind from 7, 8 years ago, thinking, oh, maybe $500-600 a month.
Yeah.
And then they tell you, sorry, it's going to be $1,150 a month for the car that you need for your family right now, or the car that you need to get to work. And really, the only leverage that both the consumer and the finance office has at this point is, can you kick out the loan a year and a half?
Right.
Can you go for a 7-year loan? Can you offer a 7.5, 8-year loan?
Yeah, which picks up a whole nother year of interest, and it's mostly interest, and it's just where does all of this end, right? We've got to be able to produce less expensive vehicles in this country, right?
Yeah, I mean it's really tough because for automakers, there's really no incentive for them to produce cheap vehicles, right? Automakers are in the business of making money. They're in the business of winning that business from consumers. But at the same time, where is a consumer supposed to go?
Right.
And I think the tough thing right now, too, is that used car prices have been concurrently rising with new car values, especially because during the pandemic, when inventory was short, everyone bought up a used car. Yeah. So those prices jumped too. So a lot of consumers, if they're in the market for a car, are finding themselves kind of lost and not without much options on the table.
Yeah, for sure. You mentioned that the SAR is at 15 million for June. How does that compare to last June in 2024?
I don't remember the numbers off the top of my head, but one of the big contributing factors to the SAR being a little depressed in June was that in April and May, when the threat of tariffs seemed just around the corner, there was a lot of people who, maybe they had a 3-month window to buy a car that just went out and bought them. They're like, oh, I got to get the sale in before the tariffs hit and the prices go up some arbitrary number, right? I think there was a number going around that all cars are going to jump in price like $3,000, $5,000, but
Right.
that hasn't really materialized. And so all of the people that should have been gradually in the market from April, May, June bought up all of that in April and May, and then in June, people who should have been shopping aren't. And so maybe with the tariffs seemingly being currently irrelevant, maybe sales will pick up again a little bit in July.
Yeah, yeah. You had a few companies out there that actually gained market share in Q2, GM and Ford being two of them. Talk to us about that.
I think GM and Ford have been kind of a steady presence for consumers with the threat of tariffs and stuff.
Yeah.
Ford went out and said, hey, we know it's kind of crazy out there. Here's employee pricing for everybody. We're going to work with you to get you in the car that you want. And conversely, GM said, we have everything that you need. We're not going to change anything. We're not going to run you around with, weird incentives and deals that you may not qualify for. We're just going to keep everything the same. Just come in, we'll work with you, and we'll get you in the car. And I think the biggest thing right now for a lot of people, including businesses too, is when you have uncertainty in the marketplace, having something be there and be certain, I think speaks a lot of volume.
Yeah, very good point. Very good point. Talk to us about Ford replacing their employee pricing incentive with zero down and 0% financing. That brings back some, programs of the past, right?
Yeah, I think a big takeaway that we saw, the flip side of people going for 84-month loan terms and super high interest rates is that the 0% interest rate has dropped below 1% for the first time, which means fewer and fewer customers can afford them.
Yeah.
And because typically a 0% interest rate is tied to what? A shorter loan term, right?
Yeah.
With a 36-month, 48-month loan term. And when you have customers that can't afford that, I think Ford saw kind of a gap in the market where they said, hey, look, we know interest rates are taking a huge chunk of that purchase price up, $10,000 plus on an average car purchase.
Right.
So here's what we're going to do to help you out. Forget employee pricing, forget anything confusing. Here's solid way to get you in the door.
Yeah.
000. Just come in and sign.
Yeah, exactly. And it takes programs like that, much like the subvented programs on leased vehicles. Although leasing in some areas and some brands is back to where it was prior to COVID, but in large part, leasing just isn't back yet, right, in its entirety.
Correct. Typically, prior to the pandemic, we saw lease rates, hovering around 30%, give or take a couple points depending on the month.
Right.
When inventory was really bad and incentives kind of dried up, we saw that number tank down to, 15%,
Yeah.
12%, And when that happens, one of the things that I think that we've been really tracking is that those cars are supposed to come back into the used market, right? In 2-3 years' time.
That's right.
And that has really, effectively dried up, which is also constraining the used market as well. And to your point, across the board, we haven't really recovered yet. I think lease penetration rates are currently hovering around 20%. And a lot of that is kind of being held up by EV leases, which are around 60-70%.
Right. Yeah. The incentives on lease on EVs are still pretty strong out there, right?
Yeah.
So what impact will the tax credits going away, what kind of an impact will that have on EV sales moving forward into the third quarter here and beyond?
I think really short term, at least till September 30th, I think there'll be a lot of flurried interest and pull ahead for customers that may have been curious about getting into an EV.
Yeah.
I think dealers will be very enthusiastic about getting the inventory offloaded from their lots. And then after September 30th, I don't know. I think it really depends on how much inventory will be left because dealers will be motivated to get rid of them.
Yeah.
And then in the long term, we have no idea. Pricing parity between ICE cars and EVs aren't quite there yet. So I think it'll really come down to how much incentives automakers are willing to put on their vehicles to continue moving metal.
Yeah, for sure. Has Edmunds changed their forecast or their SAR forecast for 2025?
Not yet. We typically don't. Sometimes market forces are there that we couldn't have foreseen.
Right.
And so we'll see what happens at the end of the year.
Yeah, it's going to be quite a year. Joseph Yoon, Edmunds Consumer Insights Analyst, thank you so much for joining us here at CBT News. Very much appreciate it. And we will see how the next month plays out, right? I think it's one of these situations where every week is a new week. Certainly with the president announcing tariffs, he's announcing them right now as we speak on another country. But it'll be interesting to see how all this plays out.
Yeah, we're keeping a very close eye on the news as things happen.
Absolutely. Thanks so much for joining us.
Yes, of course. Thank you.
Thanks.